You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time yet again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-evolving Options Insider Radio Network, where you can, of course, find all of your favorite archived episodes of Volatility Views. So you want to say, hey, what were those guys chatting about back on the last non-farms, or what were they talking about during Brexit, or maybe the flash crash last August? You can find all of that via all of the regular outlets for our network. And of course, you can also find all the other fine. We have 15 programs on the network now. So pick your poison. If you want volatility, well, we got you covered here. If you want to know about futures options, and we talk about some volatility in there as well, then we got you covered there as well. Of course, we also have the someone's dialing the studio here, excuse me. And of course, we also have the, of course, new edition, the business show, if you like a little bit of nonsense with your finance, as they say. Well, of course, you can find all of that via the mothership, the flagship, theoptionsinsider.com, or via iTunes, or TuneIn, or Stitcher, or any of the other many fine outlets that our programs are available on, including, of course, via our own mobile app available on iOS, Android, and indeed the Fire OS. And of course, I should mention it's VolViews. We are streaming this live noon Central, 1 p.m. Eastern on Friday, July 8th. For all of you who can join us live via the Mixlr app, MIXLR. Of course, you can just set up an account there and be notified. Follow us there and be notified whenever our shows go live throughout the week, or of course just follow us on social media, and we'll tweet out and Facebook out the link there as well, even on stock twits for you stock tweeters out there. So no shortage of ways for you guys to follow along live with the show as it's rolling. And speaking of the show, I am joined as always by my usual cast of characters, starting out with, let's go in the order of grease. So the most grease first, we shall turn to the greasiest of meatballs, Mr. Mark Sebastian from Option Pit, as well as Carmen Line Capital. Mr. Greasy Meatball, welcome back to the program, sir.
Good to be here, man. Good to be here. Quite the day here, huh? Lots to talk about in terms of vol.
Yeah, there are a few things to talk about, but before we do that, let me welcome on our other cohort here, our partner in volatility crime, the senior instructor over there at the Options Institute, Mr. Russell Rhodes. Russell, welcome back to the Volatility Views program.
I am just absolutely tickled pink to be here.
I'd like to tickle you orange.
Oh my God, I shouldn't have thrown that softball up there at all. Thank God we are separated by several blocks at least. I know I'm safe from being tickled by a greasy meatball.
Yeah, that would leave some marks on your clothes. So before we get down the tickling realm, we'll keep on rolling right out into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
Such a fun song. We can let it go for a while, but of course we got to get into what's moving, what is shaking, what is rocking, what is rolling. In today's market activity from a vol trading and analysis perspective. And of course, like I mentioned at the top of the show, it is indeed middle of the session here on Friday, July 8th, for all of you listening after the fact. And yet another eventful Friday here. We are, of course, living in a post-Brexit world, so all eyes are on the markets now and the numbers coming out therein and what they portend for the market going forward. We had a big one this morning. We had the first non-farms post-Brexit. So everyone was kind of playing the wait and see game. It certainly made the prognostication element on last week's show a bit of a challenge because we didn't know this number was going to really tank the market or really rally it. It seems like we are indeed in the latter category as we are recording this. Most of the major indices up, way up, well over 1%. The S&P up about 1.3%. The Qs and the Dow up similar percentages on the day, and the VIX Cash playing the wah-wah there on the old Price is Right game, off about 1.2 handles on the day right now. Well south of even that very low 15 handle, right about 13.5 level or so right now. So non-farms clearly giving a boost to the market and clearly just whacking all of the volatility there across the board. So that kind of answers a question a lot of us had on our minds, was what was going to happen, how was the market going to shape up post non-farms today, how was the vol going to play out. Of course, this kind of really puts us in some interesting realm right now, because of course it seems like forever ago, it was just about a week and a half ago, I believe now, a little more, actually 2 weeks, where we had the FOMC meeting, and there was a big debate. Will they raise? Of course, they ended up not raising, but it came down to the wire. Then, of course, post-Brexit, there was a big debate, and they were actually pricing in a pretty hefty probability that they may actually cut rates. And now here we are again. The economy is not in the toilet. So we are in a very, very weird state of affairs where internationally we see negative rates. We see issues like the Brexit really putting a lot of brakes on global economies. And yet here in the States, we have numbers like today, which cause a little bit of a different reaction. So a lot of interesting stuff to parse. Maybe we'll start. I'm gonna spin my wheel here, and we'll see who comes up first. Oh, it comes up on the ghost of Russell, but he's not here, so Russell will have to fill in for his own ghost. Russell, what's catching your eye in today's activity, sir?
Well, I mean, it's real easy just to say the absolute crush that has become VIX. You kind of expect that around the 4th of July, but then they start to ease up after the 4th of July. The S&P 500 is definitely, doing what it always seems. All you got to do is buy on weakness. It will always. A couple of days ago, there was a Twitter hashtag that was trending. 5 words of wisdom or something like that. And I started to, but then I decided I didn't want the compliance guys to call me. I really wanted to tweet, "You always buy on weakness," or something like that in 5 words.
Yeah, they'll never give you that one.
Yeah, I wouldn't be able. I'd be put in the penalty box a little bit for that. But I think everybody's surprised once again at how the equity market has rebounded. And now we're pushing. I guess we're pushing 2016 lows, or thinking about 2016 lows in VIX. The other thing that I want to talk about in a little while that's not on our docket is gold volatility. So I'm not
check your docket, sir. It has been added. We're on top of these things. We're on top of these things. We find all these things, these little nuggets.
Okay.
Scroll on down through the docket, sir. Our team here, our show prep team is way ahead of you. Before you even wrote that, it was already in the discussion docket. But you're right. Not only 2016 lows for vol, but we've pretty much erased now in the broad equity market pretty much all of the post-Brexit apocalypse there. So we're apparently all is forgiven, all is forgotten. The markets are off to the races yet again. That little brief hiccup known as Brexit, even though we really have no idea how any of that's going to play out yet. It's going to be a multi-year ordeal. Forget about it. It's in the rearview mirror. The market certainly has moved on, and maybe we will sometime soon. But before we do that, Mr. Greasy Meatball, in addition to pop-up diners that reference old 80s Saturday morning, I guess it was a teen show at the time. I don't know really what to call it. Aside from visiting those, what else has been on your mind out there in the realm of volatility?
Well, I think it looks like the low on the year close is 1312. We are getting near that, but the S&P is actually at the year high, and is within 7 handles of the all-time high. And that is, that's big news that we are that close. And it looks like it wants to break it. I mean, I think the stunning piece is that this has not caused this really good report has not caused somebody to go, oh, maybe the Fed's going to start raising rates. Maybe bonds need to be sold because the Fed is going to raise rates. I mean, if some Fed governor in the next week or so is going to put a rate hike back on the table at a minimum September, and maybe before that. And that is going to affect the bond market because there's no way we're going to have the Fed fund rate at 50 basis points and the 10-year Treasury at 130 basis points. Something's got to give unless that curve is going to get that so flat that it inverts, which would be crazy at these low levels. So I think there's some serious volatility in the bond market getting ready. And that could be really, 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 I think a shoe to drop here. I think VIX vol at 13. If you consider what the realized volatility of the market has been, I want to own it. I want to own Gamma here. Gamma is working. And if they want to sell me a S&P straddle that expires in a month, which would be like the August 5th straddle. If they want to sell that to me, let's see, the 21 quarter straddle. If they want to give that to me at $52 on a day when we're up $27, I will buy it all day long. Because I think that straddle's completely oversold, and I'd be a buyer of these vols.
We should, of course, add the caveat that you're looking to scalp a lot of gamma around that, not necessarily just let that straddle ride. I mean, the latter could happen too. The straddle could pay off as well, but you're looking more to milk some gamma.
Yeah, I would be like buying the straddle, and maybe I'd sell like a put to take advantage of some of the curvature. You mean you can buy the 21 quarter straddle and sell 2050 put and pay less and pay what, $45 for that spread, $44 for that spread? That's a steal.
There you go. You heard it from the Greasy Meatball. SPX straddles. A steal. Buy them all day long. And then just put them in your retirement account, set it, and forget it. Because that's how that works, baby. I like it. All right. Speaking of crazy, here, as we were talking about earlier, we always do the prognostication. Easy for me to say today. One more time. The prognostication game here at the end of the show in the Crystal Ball segment, and it's always fun and a lot of good laughs. And sometimes the ghosts of past members come in and really knock it out of the park. Other times it doesn't happen. So I thought we'd turn the tables on our listeners and give them a chance to play. So yesterday we thought, hey, going into the non-farms tomorrow, where do you think VIX Cash is going to close? We gave them 4 choices. We said between 15 and 16, between 16 and 17, between 14 and 15, and between 13 and 14. at the time that we posted that, I think we were hovering around around the 15 to 16 range. So we were in that range. So obviously we're hovering right now about 13, a little over 13.5 right now. So we're on the ladder, the south side of that range. But interesting stuff. Where do you guys think the audience picked? What do you think was winning our poll right before the non-farms went live? I'll start with you, Ghost of Russell Rhodes, a.k.a. Russell.
15, 16, and I haven't looked, so I'm not cheating.
I won't ask the same thing of the Greasy Meatball because I know he loves a good cheat. But that said, Mr. Greasy Meatball, what do you think was winning? It may surprise you.
I'll say what was the highest one?
16 to 17.
I'll take 16 to 17.
Then you would indeed be correct, sir. Our audience was a little bit bullish volatility. Kind of like me last week. I was feeling the vol love here on the show as well. That was winning by a pretty hefty margin, about 40%, picking between 16 and 17. Remember, this is pre-non-farm, so they were expecting a sell-off post-non-farms and a nice gap up in volatility there post-non-farm, which is kind of interesting. A relative tie between 14 and 15 and 13 and 14, both about 123, one about 26%, and then only 11 actually picking where the VIX was between 15 and 16. So that was actually good. The audience was looking ahead a little bit. They weren't just saying, well, it's right here right now, so let's just pick where it is right now. I love our listeners. So there you go. They got to play a little bit too. It doesn't seem right that we get to have all the fun and or all the shame of picking in the crystal ball segment. Let our listeners have some of the fun there as well. Of course, we are, like I said, hovering right now in the realm of VIX Cash, about 13.5, and our favorite indicator, we discussed it at length on the show last week, VVIX, also taking a bit of a break, well off of its previously lofty levels well north of the 100 level, getting into about the 130 range, I believe, at one point. Now we're at about 86, even south of the 90 handle. So getting back on the lower end of that range, heading back down towards the mid 70 range where it was hovering before all of this craziness began. So perhaps VVIX also showing us that there isn't a lot, perhaps, of interest or concern coming in the future. Speaking of futures, the VIX term structure in the future is always worthy of note, worthy of interest. Mark, I know you guys watch it over there at Carmen Line throughout the week. You also talk to the Typhon folks who pretty much live in the term structure all day long. Anything interesting shaping up out there in the land of VIX Futures?
Continues to be steep, but they've really pounded VIX Futures today too. Basically everything's getting, vol is getting taken out to the woodshed. That is what is going on.
Yeah, it is kind of weird. We joked about this on the last couple episodes now that, pre-Brexit, they were kind of smoking vol, and we all kind of arched an eyebrow at that and said maybe not the best idea. In hindsight, it certainly wasn't. And then, of course, going into non-farms, people really weren't bidding up the vol too much. That, of course, worked out for them now. But even now, they're not at all reticent about crushing volatility. They were crushing it again last week going into the long holiday weekend. It is surprising given all the unknowns that are still lurking out there in the marketplace. We literally have no idea how this Brexit thing is going to play out, and yet people are still not at all complacent about crushing volatility out there. Part of that is, of course, we are in the summer. We are heading into the summer doldrums. We're in the middle. July is certainly doldrum time of year usually, and VIX Cash tends to settle into a nice, predictable range, usually on the low end this time of year. So certainly some of that perhaps playing out the seasonality of VIX. But there have been enough breakups in that rhythm, at least for the last few weeks. I think people would want to keep a little bit in their back pocket. But apparently, at least so far, that is not the case. But let's move on here to certainly one of the best transitions and perhaps even one of the best segments on the show. It's time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
All right, Mr. Russell, it's time for you to take a deep dive into all things weekly VIX options. I've set aside about 28 minutes for you on the program to do so have at it, sir. The floor is yours.
Oh my gosh, 28 minutes? Oh well, we've got the weekly futures that expire next week, and as Mark Sebastian already mentioned, they're getting hammered. They're down at 1460. They're still at a point premium to VIX, so you've got an opportunity if you want to try to put on a short volatility position into expiration. And it looks like somebody may have been doing that because the July 15s that trade next week, they've traded about, or that expire next week, they've traded about 6,200 contracts, and at being offered at 80 cents right now, if VIX sticks where it's at, they would actually that would actually be a profit at expiration. And I look for those when I'm talking to you guys middays on Fridays, and typically I don't come across many of those. So, the futures is getting crushed, but not necessarily, not to the extent where you can't still short volatility. And, we know from the past few years and some comments that we get from people about how it's easier to be short vol when it's around 13, 14, as opposed to when it's around 17, 18. Those opportunities are still popping up. And it really does look like somebody's taking advantage of that with next week's weeklies. Going out to, July 27th or August 3rd, there's very, very, very little going on out there. So if you want me to stretch 28 minutes talking about one strike price with one expiration, I can do it. But that's kind of the biggest thing going on right now is just with the crush isn't hitting the futures as much as it's hitting the index. There's still some premium in the futures relative to the index. And, if you think the market's going to hang around up here and volatility is not going to run up for the next couple of days, there's still opportunities to short volatility.
There are opportunities abound out here in the marketplace. Even though you're right, even though the crush is on, there still are some spots if you are indeed so inclined and want to hit some volatility. Let's look back at the week that was, talking about the big VIX options now, the mothership. And like we said, we had a bit of a truncated holiday week here in the States, so we all had Monday off, so only a 4-day week out here. And a fairly light volume week, all things considered, coming back on the heels of the holiday and coming back post-Brexit and, of course, the non-farms today. It wasn't really lightening it up from a volume perspective. VIX has been averaging a little over 600,000 contracts a day, and this week it pretty much never touched that. We are, of course, streaming and recording this right now, middle of the session here on Friday, and we're at about 340,000 contracts have gone up so far. So it seems like it probably won't threaten that level again today. And we did about that number total yesterday, so not a lot lighting it up. Yesterday, Wednesday, about 437, and Friday, just flirting with 600, about 585,000. So overall, a fairly light volume week. Not a lot of huge trades to parse, but there were a few interesting ones. Looked like today, the big trade of the day today was pretty small, about 10,000 lot, but it was 4 legs, so 40,000 or roughly 40,000 total. Looks like someone perhaps blasting away at a bit of a VIX call strip. Looks like it was the July 19, 17, 16, and the 18 in there as well, doing it about 10,000 times with a little bit of a ratio on the 18s, about 6,300. I'll have to dig into some of those to see, but it looks like they were all at or near the bids on most of those spreads going up. So it looks like probably blasting out on a strip, but we'll have to dig in a little bit more to see for sure. Those went up right as we were going into the show here today. Looks like yesterday we've talked a lot here on the show that the hot strike has been pretty much for quite some time now has been the July 30 strike. The ever optimistic July 30 strike has had just 400,000 plus contracts open on it for some time. We're seeing as we're getting closer to the end of the July trading cycle, people starting to finally unwind some of those bad boys. We saw about 14,000 of them going up for a nice nickel yesterday. So someone deciding to dump. Still about 460,000 open on that strike. Spoilers for the hot strikes later, but still, yeah, that's just been number one with the bullet for some time, and even dumping nearly 15,000 of them isn't really going to budge that needle too much. We've also talked a lot about puts out here of late, and puts have been active. The July 16 put, someone gobbling up about 5,000 of those bad boys, lifting offers out there, also doing it. Looks like in a spread with the 14 halves and the 15s as well, about 3,500 each of those. So some funky verticals going up out there as well. Looks like perhaps little bit of a small strangle going up on Wednesday as well, about 2,500 of the July. Actually, no, I'm sorry. That looks like more of a straddle. The July 16 straddle going up about 2,500 times. Paper buying that guy, aggressively lifting some offers out there. So perhaps someone heeding Mark Sebastian's advice, deciding strangles are attractive out here, straddles are attractive out here, or gamma in any format is fairly cheap out here, and deciding to lift some of that. One of the more sizable trades of the week came up on Tuesday. Looks like we had a bit of a put 1x2 going up. We had the July 16-15 1x2 going up 19,000 by 38,000 times. Looks like selling the 16s, buying the 15s, doing that 1x2. So kind of a bit of a flip of the script as what we usually see on the call side. Usually that call 1x2 has kind of been the trade du jour out in VIX land for some time. Someone deciding to test those waters on the downside. And we'll have to see. This one up on Tuesday. So this one looks like they did it for. Looks like they actually looks like they collected on this one. Looks like they did it for about 12 cents. They collected on this, so that could be working out pretty well for them. I'll have to go price that bad boy up in a little bit. Also saw paper sweeping some SEP puts, the SEP 17 puts about 25,000 times on Tuesday. So Tuesday, some of the more sizable paper that we saw lighten up this week. But overall, not exactly a wild week from a VIX options trading perspective. Lighten it up for the top 10 hot strikes again for this week. And surprise, surprise, the July 30s taking the top spot yet again with about 400, nearly 460,000 contracts open. That has just been the heaviest strike for quite some time. We fall off a cliff to number 2 with just a tick over 300,000 of the July 16 puts. So puts hitting the number 2 spot, which is a rarity out here in VIX land. Kind of shows you just the depth of the VIX apocalypse we've seen of late. People piling into those puts. Things are turbulent out there in VIX land when puts are getting near the top of the charts. Number 3, also a put, the aforementioned July 15 puts with about 277,000 of those bad boys open. Then we fall off a bit again to number 4. The July 23 calls, about 195,000 open to those. Then some more puts rearing their ugly heads on the charts. 175,000 of the July 17 puts. Then the July 25, 22, and 28 calls take up the 6 through 8 spots with about 174, 160, and 155,000 contracts, respectively. Then more puts. So that playing a home, that's about 4 puts of the top 10. Not bad. That's the July 19 puts, 153,000 open of those bad boys, and winding us out of the top 10. The July 26 calls with about 150,000, almost even open on that strike. Total of about 7.1 million on the call side, about 2.6 million on the put side. Before we segue out of equity realm volatility into some of the commodity realm, there also is a little bit of interesting stuff out there in the equity realm. I'm not sure if this really qualifies as volatility so much as it is just straight up crazy gamma lottery tickets. But we were talking about it yesterday on the option block, that spectacle that is Valeant rearing, I should say, its ugly head yet again, with a lot of talk about people piling in to the July 25s expiring today, doing those for anywhere from a penny up to 33 cents. Well, looking at VRX right now, for all of you wanting an update on those, it's about 23.30. So yeah, those not exactly paying off so far. We also saw, I believe, the 24s, and I think even the 24 halves going up for size. Looks like all of those, if they were indeed, as they were indicating, very, very near-term plays on a huge pop in VRX, then not so much. If someone was looking to hedge, perhaps a cheap hedge on some short stock, then maybe he's smiling a little bit more the stock off, about 0.6% or so out there. We also saw a little bit of a blip in Chipotle vol very, very recently, as some rumors were lurking out there that yet more poison burritos were lurking. I think this time in New York, that turned out to be like all the Yeltsin rumors we used to hear back when I was in the SPX. Maybe I'm dating myself a little bit with that, but that was always the rumor du jour out there. Yeltsin's dead this time for sure, and the market's going to sell off. This time it seems like Chipotle sickness rumors are the rumor of the day. That one was chopping at the stock, causing a wee bit of vol out there, and it seems like people were taking advantage of that to really jump into those upside near-term calls, particularly front month and the weeklies. All of those 30-day implied out there hitting about a 1-year peak out there. People just gobbling up, particularly on the call wing. People just taking advantage of any sell-off out there to gobble up those calls, and looks like that play actually worked out. Chipotle up about $8 or about 2% right now on the day. So all that call love out there, I guess, seemed to be merited. Interesting stuff. Not a lot yet on the earnings radar, but anything else out there in single names attracting either you guys before we move on to some of the commodity realm?
I think Vol's probably a little too cheap in some of the interest rates sensitive stocks. So like I've been looking at like the utilities and like consumer cyclical or consumer non-cyclicals, things like that. Kind of some of the boring names that are have big dividends, and those to me look like the premiums are a little too oversold. The other thing I was just kind of looking at was some international stuff, but nothing crazy.
Russell, I know you like earnings season. Anything catching your eye as we start to prepare, I should say, really to embark on a new earnings season? But there's still some vol out there and some single names. Anything catching your eye this week?
Well, I'm going the other direction on you. You were, I was going through the homepage on the CBOE website while you were talking, looking at, or the homepage for volatility indexes, and we've got a bunch of them that are based on, different U.S. markets and even individual stocks. Every single volatility index is down right now. Including, and I thought the green ones might be one of the handful that are on individual stocks, because we do have volatility indexes on Amazon, Apple, Goldman Sachs, and Google and IBM, and even those are lower today. So this is the first time I've seen every single one of the volatility indexes that we quote down on the day's not over quite yet, but all of them are down right now. So it's hard for anything to catch your eye as far as higher volatility goes, because it just ain't out there right now.
No, it does catch your eye, though, Mr. Rhodes, is the volatility of the shiny stuff out there. Yes, gold. Haven't talked gold on quite some time here on the old Volatility Views program. It's mostly been some of the other commodities and areas that have been taking our attention. And it seems like Mr. Rhodes certainly concurs, because I think your first line of your blog that went up today, listeners, you can find it over there on the CBOE website, was, I kept my eye off gold this year, and boy, have I missed a ride. It has been an interesting one to watch. You have a whole article here with a bunch of charts and everything else here, Russell, so I won't spoil it for you. I'll allow you to have the honors. What was catching your eye? What prompted you to write up a whole post here on GLD volatility and volatility skew?
Well, I had no idea that gold had done what it's done this year. While I'm talking, why don't you retweet the thing so that people can see the link to go to the blog? How shameless is that?
I will shamelessly retweet you, sir.
Thank you. Shameless retweeting, which costs you nothing. So first off, I really have been paying attention to some other markets, and I had no idea that gold was up like 28% this year. That one floored me right off the bat. And and we're basically pretty darn close to 2016 highs. Now, gold, and I think most of your listeners know this because we've talked about it before, but commodity volatility doesn't act like stock volatility. And in fact, this year's high for GVZ coincided with the high for GLD. They went up together back in early February or so. GVZ is still, as of yesterday, it was up around 20 or so. It's getting hit with everything else today, but the gold volatility is still higher than average for this year, which you can't say for a lot of other volatility indexes, which means if you're looking for something that people are thinking is going to move around, gold is one of those markets right now. So then I took it a step further and I took a look at the skew for each of the options that expire the next 6 Fridays in a row. I didn't include today. Today was kind of whacked because there's only a few hours left on the implied volatility. You really can't read much into implied volatility for options when there's just a few hours left to trade. When GLD was around 120 29. I put together a skew chart. The risk, if you want to think about the big price move as being a risk, the risk is for a move to higher levels for gold. It looks like not a lot of hedgers, speculators, or short-term traders or anything are looking for the next big move in gold to be to the downside. They're expecting continued follow through to the upside. Now, whether or not when you start to see consensus like that, if it actually plays out, that's another thing. But option traders are definitely looking for higher gold prices from here, at least through the end of the summer.
Yeah, listeners, you can check all that out. We, of course, if you're following along live, I just retweeted Russell's link, so you could click on the link to his article there. We'll also put the link in the show notes. We also will put some of these cool graphs that he likes to throw some visuals in there. All of these graphs. Actually, I noticed you pulled these from our friends over there at LiveVol. They can make some pretty cool graphs over there. So check it out. You can run this yourself if you are indeed running the LiveVol platform. He just pretty much did a quick skew scan. It's pretty easy to do. It's right built into the tabs over there at LiveVol Pro, and you can see exactly what we're talking about here. The skew, the slope of the curve is definitely to the right, which indicates indeed a lot of love for them there. Calls kind of something similar to what we were seeing out there in Chipotle. That was more for the nearer term stuff. And I certainly concur with you there, Russell. Not a lot to really be taken from that front strip. You kind of got to take that out of the equation, because that's really just gamma at this point. There's not really a lot of a volatility story to be said there. But yeah, gold, interesting one. I think it was almost exactly a year ago now on the network. It was mid-July when we had our long and short of futures options program we do with the CME. We had one of their chief economists on talking about what he saw was at the time a trough in implied volatility over there in the big COMEX gold options. And that, of course, was one of the more well-timed episodes we've done, because about a week, not even a week, about 3 or 4 days later, we saw an explosion in volatility for gold, and it kind of went off to the races and had quite a bit of moves. And, of course, earlier this year, we saw a lot of moves out there in gold as well. So, yeah, a lot of interesting stuff out there in gold, and we'll certainly probably be talking about that again. In fact, if you're interested in gold, stay tuned to the network in a couple hours. We'll get into it in a lot more depth over there on This Week in Futures Options, which certainly there's a lot to talk about as well. Something else we'll touch on that program, we'll dive into the volatility side here, is, of course, the Texas tea, the black stuff, the crude oil, crude vol back in the toilet, crude futures back in the toilet. Kind of a weird kind of double whammy. We were talking here not that long ago here on the program, OIV, OVX, pick your poison for the crude VIX that you like. Your proxy for VIX, for oil vol, both of them back in the low 40 range after having been much more elevated than that. So yeah, crude vol is pretty much saying not much happening anytime soon in terms of the overall weight on the futures. Seems like kind of a combo of a lot of things weighing on it, including there was a smaller than expected draw over there on the commercial crude stockpiles, and that, of course, weighing in also some more production coming online from Canada after they had those issues with the wildfires, as well as some production coming online from Africa and other areas. All that kind of combining to weigh on crude. And if you look at this, it's kind of the skew story, Russell, because we're looking at the skew story here in crude. These are for the big WTI options. This isn't USO, but I'd imagine the story is pretty similar out there as well. Is the skew story for crude is all to the downside, all to the puts. Again, perhaps reflecting a lot of this near-term concern. This skew chart we have here goes out to about January of 2017. So for the next 6 or so months, it seems like most of the structural concern is to the downside. That could be good news for you out there if you're a crude bull, because the calls have lost a lot of that juice they had earlier when crude was rallying and people were piling in to the calls. So interesting stuff afoot here. Kind of a tale of two different products and a tale of two different skews, both crude and gold. Anything first, before we even finish up, I'm going to give you a chance to weigh in, Mark, if you have any thoughts on gold skew, then, of course, what's cooking out there in the realm of crude.
I think gold is way overbought, and I'd be looking, if you can sell skew, I might be looking at like a bull broken wing butterfly that actually produces a negative delta and a credit as an interesting trade. I would also look at a few other trades like that. crude vol is the other vol that you can sell. That's it. There's not a lot of that seems easy to sell. OVX is still over 40 and is probably too high. And so those are basically we pinpointed the two pieces where I think there's some optionality that is probably way overpriced.
And Russell, I know you kind of just recently rediscovered gold. You've been keeping an eye on the Texas T out there as well and how things are shaping up. Like we said, kind of a bit of a tale of two different skews out there, all upside all the time in gold and all downside all the time, at least for the foreseeable future out there in crude.
Isn't it funny how gold or oil seems to be doing one thing or another, but they never seem to do the same thing at the same time?
It is funny.
And I was going all the way back to, like 2012, 2013, looking at some old blogs that I'd written about gold when it had that gigantic move. I was doing a research project on things we'd written up. And I noticed that I'm never talking about gold or oil at the same time, and oil at the same time. It's always one or the other. So I guess we're undergoing this shift from giving love to gold, from giving love to oil. But it is interesting to look at the skews are like mirror images of each other as well, which is kind of interesting. I was just using my live vol platform to look at the USO skew and kind of take a screenshot and then compare it to my what I put together for gold, and they look opposite. So the trade of the day, and this is for educational purposes only, is short oil and long gold.
I like it. Clearly, that's how it's shaping up. That's how the options are shaping up. Speaking of shaping up, it's time for you guys to shape us up with your questions, your comments, your insights. If you are indeed following along on the live stream, you can fire some off live. Otherwise, hit us up on the old social media after the fact, twitter.com/options, facebook.com/theoptionsinsider, or, of course, via the website and even the old-fashioned way, questions at theoptionsinsider.com. Excuse me. And, of course, it's all baked into the mobile app as well. So without further ado, let's fire up the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Volatility Review. Like the man said, this is the portion of the show where you guys take the reins with your questions, your comments, your insights, not just for us, but for your fellow Options Insider Radio Network listeners. Let's kick things off. Very appropriate, actually, very timely, because we were just talking about this on the program. We have a question from Engstromm, and he or she wants to know, can I trade OVX? Very simple question. OVX, of course, we talked about it. I just referred to it earlier in the crude segment. It is the crude oil VIX, effectively. There's a couple of different flavors of it. There's, of course, OIV, which I also mentioned. That it looks at the big futures options out there. And then OVX, which looks at the USO, which is, of course, a popular proxy for a lot of you guys out there who, on the retail side, who like to trade themselves some crude or some sort of approximation thereof. And they move, even though they're on different product categories, they move pretty much in lockstep, showing there is a pretty tight arb between those two product categories. But all of that is a long way around to answering this guy's question. It's a pretty straightforward question. Russell, you're the dedicated SIBO rep. So I'll let you handle this one. What do you have to say for our friend here, Mr. Engstromm, who really wants to sling some OVX?
Not right now.
There you go. That's a pretty straightforward answer.
Pretty straightforward answer. No, we had OVX futures and options listed, and I think we lost access to the liquidity provider in that market and a few other markets. So right now, the only volatility futures and options that we have available are on VIX and the CBOE Russell 2000 Volatility Index. That doesn't mean those things will not change, but right now that's where we are.
There you go, Mr. or perhaps Mrs. Engstromm. You never know. Good, straightforward question. As always, a little bit longer answer, but that's kind of the fun here. That's why you tune in to Volatility Views here. Yeah, hopefully. I mean, it's one of those products. This is kind of one of those ones that has always been kind of a bit of a mystery to me, kind of like the GVZs and others, the gold vol that you were referring to earlier. These ones, should have been, you'd think, all the interest in crude and everything else going on right now, you think a crude oil VIX would just be, or a gold VIX would just light it up, would just be huge. And yet, for reasons unknown, the fickle populace hasn't really gathered around. And now, as you mentioned, they can't do it in OVX now, but they had a brief opportunity there. And yet, for whatever reason, sometimes it's just it's fickle what the populace really will rally to in terms of products. Hence the death of minis that everyone thought were going to be a home run, and things that we thought were going to be maybe not that successful take off. Weird stuff out there. All right, let's move on to let's see. Let's go to this one here from StGermain. He writes, "Hey, when is it preferable to use VIX options, and when is it better to use VIX futures?" Well, this is kind of it seems like a volatility spin on kind of an age-old question. We must have a lot of futures traders floating around the network these days. We're getting a lot of variations on this theme of late, of when is it better to use VIX futures, when is it better to use futures, period, when is it better to use options. The conventional wisdom swirling around all that is, of course, futures are Delta One products. They are the underlying in and of itself. So if you have a very near-term explosive movement, the market's selling off and hell in a handbasket, you want to get in right away and just ride something down or up. Futures are a great vehicle for that. And a lot of the other scenarios we talk about here on this program, other programs on the network, we talk about things like gamma and theta and vega. Those things usually take a little bit more time to unfold in the marketplace. You're not saying you can't, but it's difficult for those things to occur on an intraday basis unless you're talking something crazy like, a Valeant or something else like that, and that's usually more delta based anyway. It's that's usually the old saw. But that said, Mark, I know over there at Carmen Line, you kind of mix and match a bit. You use mostly options, but you've been known to delve into a future or two, and sometimes a volatility ETF as well. When do you draw that demarcation line? When do you say, hey, I want to use a VIX future, or when do I want to just pile into the old options?
I think those are two different answers depending on what you're trying to do. If you're hedging versus if you are speculating or trying to trade small moves. So it really depends on what you're doing. There are instances where, the way I kind of look at the futures is they're the more dynamic way to actively trade in and out of things, or to dynamically hedge in the moment. Whereas options are the way to set up hedges, to create hedges that are going to be there for a longer term outlook, a longer view. So, my friends, the Thompsons, they are dynamic, and that their position is changing daily and by the minute. They are futures people, whereas my stuff, as I am the Carmen Line people here, our vol strategy is much more slow paced and hands off. We are option people. When I'm dealing with hedgers, somebody that wants to have kind of a static, systematic hedge, I point them into a true hedge. I point them to the options. Someone that's looking to trade kind of a crisis alpha type hedge, again, I put them into the futures. So it really depends on what you're doing.
Yeah, use case does drive a lot of your product choice at the end of the day. Mr. Corner Office, anything to add here? We've kind of touched on this topic, not so much on this show, but a lot of other programs on the network. The demarcation between futures and options. But you like to look at and monitor both. What are your thoughts on when to use one, when to use the other for our friend here, Mr. StGermain?
I'm indifferent because they both trade here. But typically, if I'm looking to do a short volatility strategy, I don't want to short futures without some sort of protection. And if I short futures and buy a call, I may as well just buy a put instead. So I tend not to ever want to be short volatility that way. In fact, if I'm going to short volatility, I like to use the thing that doesn't trade here, which is either XIV or SVXY. So I overemphasize that I don't think individuals should short volatility futures ever without some sort of protection, to the point of where I get hate email asking me who the hell am I to tell people how they can trade. So that's a
good question, though,
yeah.
Russell. Who the hell are you?
Who am I? I don't know.
He's a man of many identities. He's a senior instructor. He's sometimes referred to as the corner office. One day, hopefully, when he gets to hang that shingle on his wall, maybe he can call himself Dr. VIX. We won't call him that, but maybe he'll call himself that, and he'll have his kids call him that. But so yeah, a lot of interesting stuff. So your own inherent risk aversion keeps you from slinging the VIX futures. Interesting. That's an interesting demarcation. I can certainly see where you're coming from, particularly if you're going to go all that effort, sell the futures, buy the calls. Well, what the hell? You're just doing a long way around anyway. So you might as well go for the puts in that scenario. So yeah, we do tend, hence the name of the network, we do tend to lean most of the time in the option category. But not to say the underlying, not to say the future doesn't have a place. And certainly when things are rocking and rolling, that place can be very attractive. But yeah, 9 times out of 10, we tend to lean the latter for all the reasons we've described myriad times here on this program in the past. You want all those cool Greeks. You want not just the delta, but you want the gamma, you want the theta, you want the vega. And if you want all that stuff, you got to go to the options. So that tends to be where we play 9 times out of 10. All right, interesting stuff. We got a few more questions, but I want to make sure we have time for the crystal ball and everything else too. So let's keep on rolling into our final segment. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Crystal Ball. I got someone in the chat, Alpha Deco, asking if we discussed our thoughts on VRX. Yeah, that was a little bit earlier. You may have missed that portion. So tune in, check out the podcast after the fact. We were talking about Valeant, volatility in there for a little bit, in the single name equity stuff. Or, of course, maybe we'll post this on the Mixler for you, too. The raw live stream, we can get it after the fact. You can check it out there as well. We also had if you want to hear VRX, Alpha Deco, whatever the name was there, check it out. Check out our option block program, which just posted a little while ago on our network. We had a huge discussion on that in there as well. A lot of action out there in the realm of VRX to discuss. But unfortunately, you missed it. You missed it here. All right, moving on to the crystal ball. This is indeed the portion of the program where we break down what's going to happen in the week to come from a volatility perspective. Sometimes we're dead literally when our dead ghosts come on the program and pick for us. Sometimes not so much, as in the case of last week where I went above and beyond Russell. And I said, a lot of love for Vol. I was just feeling a little bit of tumult post non-farms, and clearly that has not materialized, as we are almost exactly at a 13.5 in the VIX Cash right now. I was hovering around a 19. Russell was right behind me, but not quite as bold in his prediction. He was only a mere 18. And Mark was not feeling the love. He was feeling about a 15, but even that was not crush-esque. Crush-tastic, call it what you will, enough, because again, we were all off to the upside this week, as was our audience. So I feel a little bit better. So I don't know, how do you guys want to work it? Should the person who got the closest go first, or the person who was farthest away? I'll let you guys pick.
I'll go first.
All right, you go first. Go for it.
I'm gonna go with. So here's what I think next week. I think there's gonna be some rabble-rousing about a Fed rate hike, and then you'll see vol increase a little bit, but then dissipate as by Friday. So I'm going to say 13.5.
So exactly
right where we are.
Exactly where we are right here for
Correct.
Next week. Interesting stuff. Yeah, I've been kind of surprised week on, week out at the market's lack of any sort of reticence to crush vol. So clearly my overestimations to the upside have been not well placed. So perhaps I should factor in a little bit more crushing. That said, I just can't see them crushing it too much more. There's just so much unknown out there. Granted, it is summertime. It is the doldrum, so we could drift down slowly to, a 12 handle, even maybe break into 11 handle briefly. But I don't really see that. I think something's going to come in here over the next week that's going to inject some juice back into the marketplace. So I'm going to say we're going to rally a bit. Not too much, because once it gets a little bit higher, they're going to start crushing this thing again. So I'm going to say we're going to go back to where we were last week, which was about a 15 handle. So, Mr. Rhodes, a pretty tight strangle for you this week. Do you want to go inside? Do you want to split the difference? You want to be a carp, or do you want to go outside? What are you feeling, sir?
Want to be a carp. Oh, I'm going to go for 16.25. I think something's going to happen.
Ah, so you've been.
And I'm being a rabble rouser. Rabble.
You rabble rouser.
You've been rousing that rabble for quite some time. But you have been on the, I will give it to you, you have been on the higher vol train for some time. You've been a vol buyer in the crystal ball for a long time. It hasn't ever worked out for you, but but it has been, you stick to your theme, you stick to your gun, so I'll give you that, sir. Speaking of themes, that's our volatility views theme. So unfortunately, that means we have come to the end of yet another fun episode of Volatility Views. If you missed anything here, you're streaming it live, you missed anything, you came in late maybe, you can, of course, we'll post a raw live stream over there on Mixlr. You can get the fun, quality edited version on Monday morning. And when we post it to our network, just search for or subscribe to Volatility Views on iTunes or wherever you find your favorite podcast program. And before we go, as always, let's check back in with my cohorts, my partners in crime here in the old realm of volatility. Let's start with you, Mr. Greasy Meatball. What's cooking in your neck of the woods, sir?
All right. Well, we got our big Pro Trader Summit coming up in 2 weeks. We'll be coming toward the end of it in 2 weeks from today. So look for an email from me saying, hey, offering the VIP at a special deal. Look for some stuff from SIBO, who started marketing it, and or look in the show notes and get yourself signed up.
There you go, listeners. Get yourself signed up there by the show notes or all the other outlets. Surf on over to optionpit.com. You can find it there as well. And Mr. Rhodes, we're talking about all the cool charts from our friends over there at Live Vol. In fact, you play around with them a lot yourself when you're doing a lot of your analysis. We use them. In fact, I'm running Live Vol right now behind the scenes here to drive the show. So we do use it quite a bit. What's cooking in that realm, as well as what else is cooking over there in the land of all things CBOE?
Well, I'm looking forward to Mark's event in a couple of weeks. Next week, I'm going to Canada. I'm going to speak to the Chartered Alternative Investment Analyst Society in Vancouver, and then I am going to speak at a couple of different universities about volatility and apparently the aftermath, the lead up to and the aftermath of Brexit. Because if you put Brexit in anything, you get twice the attendance.
Yeah, just say writing covered calls and Brexit, and there you go. 22 times the audience showing up over there. Yeah, I love it. The option/volatility mecca of Kamloops. When I was driving through that.
I'm looking forward to that.
Yeah, it's a beautiful area. You rent a car and just drive for a bit. It's a beautiful area. You're going to see some stuff, glaciers in the middle of July and stuff. It's all sorts of fun stuff. Check out, head on over a little bit to Banff and some other areas. It's beautiful neck of the woods. I don't know about the volatility community there, but for the nature community, it is a pretty impressive stuff. Unfortunately, that's going to do it for the Volatility Views program. On behalf of Russell and Mark, and indeed myself, I thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, and of course, for tuning in live. We'll see you again live next Friday for more Volatility Views.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.